Hi everyone. I thought I'd say a few words on Diploma's update that you probably may have seen the other day, where it significantly upgraded its guidance for the year. So obviously very encouraging update. Organic growth, organic revenue growth target increased from 6% to 9%, and operating margin forecast increased to around 25% for the year, up from previous guidance of 22.5%. So overall, a circa 13% upgrade to consensus operating profit expectations, which means that for the full year, Diploma expects earnings growth of over 20%. So clearly, Diploma is having a great year already. I can't remember the last time it actually upgraded its guidance for the year this early on. It hasn't had its half-year results out yet. They're due in May, and normally, if the business is performing well, it will guide in its interim results for stronger trading, but it's done so early this year. So clearly, things going very well. Aerospace is an area of strength. Peerless, which is a business they acquired fairly recently, has just been phenomenal, benefiting from strong market conditions in the aerospace market. It supplies spare parts into the aftermarket, which is especially strong right now due to the huge backlog of new planes. Airlines are basically running their existing planes a lot harder. That's creating demand in the aftermarket. The supply chain pressures as well. All that's feeding into very good growth for them. You could say that's a temporary phenomena, which Diploma have previously cautioned that it may, they expect it to moderate, but so far they don't see any signs really of that. And the sheer length of the order books, of the OEM order books in aerospace, would suggest that market conditions would stay favourable for quite some time. Added to that, Peerless are gaining share and appear to be a very well-managed business as well. So it seems like it's sustainable for now. Clearly, the growth will moderate as the comparatives get tougher. But I don't think we should expect any big decrease in that business anytime soon. I expect it will continue to perform well. The other aerospace businesses within the group, like Clarendon, are performing well. In addition to that, obviously, same market dynamics. But it's not just a aerospace story. So defense is another area of strength, although that's only around 3% of Diploma's sales. Windy City Wire is performing very well. This is the business, their largest acquisition that they acquired several years ago now, and every single year has just done superbly. And FY26 is proving no exception. They have some exposure to data centers, digital antenna systems, very well-managed business, gaining share against competition, benefits, I believe, from tariff pressures. People sometimes worry about Diploma's exposure to tariffs, but Windy City Wire is very vertically integrated, has quite a localized supply chain relative to competition. So when tariff pressures exert themselves, often they gain share. This happened a few years ago when there was also some tariff challenges. They gained share, and I suspect the same is happening now, although Diploma haven't commented specifically, but I suspect they are benefiting from that. It's not everything is going superbly well for them, which is a bit of a reassurance in a way, because you don't want everything to do well all at once and then to fall off in future. But the North American seals business is showing good progress. Infrastructure spending is supporting that business. This is the aftermarket seals business, so seals going into heavy machinery. Again, that's an aftermarket business that tends to be a bit less exposed to the overall economy. International seals is challenging, so their UK business R&G is having a tough time, but UK The UK economy is having a tough time, so you kind of expect that. Life sciences is performing steadily in a difficult market backdrop. So organic growth, even excluding Peerless, is very strong and well ahead of Diploma's financial model. Margins, as I said, are continuing to expand. Ironically, Diploma, I can guarantee you, will be doing everything it can to keep those margins down. It's investing very heavily in going after new markets. It's added a number of specialist sales people, for example, to try and get more into nuclear and other areas of growth. So it has been investing strongly, and yet the margins are still going up a lot. Partly that's because the areas that are growing best, such as Peerless and Windy City, are higher margin than the rest of the group, which obviously helps. But this is a business that generates very good operating leverage, and with organic growth so strong, you would expect the margins come through. And as I said, Diploma will be trying to keep the margins down because it doesn't want to create too much of a headwind for future margin progression. But overall, I think this business should continue to grow margin well. The exception would be if it acquired lower margin businesses, which you would expect most new acquisitions to come into the group at lower margin. So that will be dilutive to the overall group margin, but obviously that's not something to really worry about as long as the returns on those acquisitions are good. There's no impact yet, at least from the Middle East conflict. Diploma has minimal sourcing out of the Middle East, and it's not seen anything material in terms of price increases for raw materials or anything of that nature. If it does, it can pass on price. It's shown that in recent years that it has plenty of pricing power. So clearly the Middle East situation could cause economic weakness, which would indirectly feed through to Diploma, but there's nothing that it's seeing right now. The demand environment I've talked about being very good. Diploma is a very diversified business. As I said, defence is only a few % of its revenue. It has lots of different end markets and has deliberately in recent years increased its exposure to different end markets. So while aerospace is clearly a big area of strength at the moment, it's not the only one. And that does provide some reassurance that the growth will hopefully be sustainable. The M&A environment feels good to them at the moment, good momentum. They've felt that market conditions over the last 12 months have been more suited to the smaller bilateral deals, so smaller bolt-ons. They've continued to see very good momentum there, and they feel confident about the short-term pipeline. So I expect them to do more of these deals over the coming months. They do tend to be small, but they are very high return on capital deals. Often can be 5-6 times EBIT valuations. They've put a lot of investment and focus into their M&A teams and trying to source more and more deals, and that seems to be bearing fruit. There hasn't been much in the way of bigger acquisitions since Peerless, but again, they feel good about something a bit bigger coming along. They can remain very disciplined. They have no need to do more bigger deals, but they do hope to do them over time. And Diploma are seen as a good home for these businesses, so I'm hopeful that there will be progress there at some point in the not too distant future. So overall, very encouraging. Yes, the share price rose a fair amount on the day of the statement, but then again, the earnings expectations have risen as well. Valuation to me still seems reasonable. I, as you probably know, I have a large position in Diploma, and I haven't sold any, haven't top sliced, continuing to run with it. So we'll see. I mean, as I say, the growth coming through, the valuation being sort of mid to high 20s PE for a business growing this well feels fine to me. So I continue to run with it, and I feel very good about Diploma's short, medium, and longer term prospects. So there's an update on Diploma for you, and yeah, all the very best.